like they definitely don't want to have it with their employees. They can't be like, I can't make payroll in 2 weeks. That would be a really like, unnecessary conversation with their staff.
Hello, Carla. How are you today?
Hi, I'm doing great. Thanks for having me.
No, it's my pleasure. I'm looking forward to this because, okay, before we get into that, tell us about wealth and worth within, and Carla Titus, who you are, who you serve, in a little quick bio.
Yeah, I'm the founder and CEO of Wealth and Worth Within, a company founded 5 years ago, helping business owners with financial consulting and advisory services. We provide fractional CFO services for high six-figure and seven-figure business owners looking to have more control over their financial projections and planning process in the company to ensure profitability, cash in the bank, and making sure that they're paying themselves. My background is all in finance. I'm a finance professional with 15 years combined experience.
Sweet. I've not talked to a CFO.
Well, now you are.
In my let's call it my formative youth, I was a financial analyst for GE Capital. So all we did, basically, we would get these packets from the sales guys, and they say, I've got a great deal. Here's the financials. Mm-hmm. And, these were fairly big leases mostly. And we would look at them and go, where's the meat on the bone here, buddy? They get these certified financials, and the first thing you do is go looking at the notes. Like, what are you hiding?
Mm-hmm.
So That's what I know about financials.
Yes, we do a lot of analysis for our clients to support their decision making with data to ensure that we're making the right financial decisions. So that is definitely a part of the job.
Yeah. Well, how do you get, look, you get the numbers, but as in everything that involves numbers, things can be fudged and nudged and changed around and provide a different perception, right? And yes. I think the easiest one for everybody would be to understand, well, if I make a lot of money profit-wise, the government wants to take it, right? So I give them one perception of my company, but I want to give my investors another perception of the company. How do you do that?
Yeah. So first, we operate with highest integrity and honesty. That is just a tenet of the work that we do. And if we're not aligned in that perspective, then maybe we're not good to work together, right? We understand that there's different stakeholders that we need to manage and communicate the storytelling of the financials and what's happening with the company differently. And for that, we will adapt and look at the numbers and the information and the trends and decide how do we best communicate that story. For investors, we're going to talk about potential. We're going to talk about upside and opportunities, and also assess some of the risks when we're presenting the financials. When it comes to tax time, we're presenting the facts, what's already happened, the data, the actuals. We are not changing that just because it doesn't benefit us. We are not going to do anything abnormal to try to avoid paying taxes. We will maximize deductions and costs to make sure that you have taken full advantage and you've only paid your fair share in taxes. Our goal is not to evade the IRS or get you in trouble. Our goal is to pay just enough that gets you in line with compliance so that you don't have audit situations later, because that's a risk, financial time, and wasted effort, honestly. So why would we want to go down that path? We just send in what we owe, and then we move on from that. That means you get to keep the rest, which is a good thing, because if you're not paying taxes, you're probably not making a profit.
Well, look, if you get to a certain level, you're probably not paying taxes either, right?
Yeah, and there's, obviously other, areas in the tax code that are allowed to be utilized differently. And that's where a good accountant is going to be worth, their money, and why sometimes we see in the news big corporations and others not really paying their fair share. They're also creating jobs. They're investing, millions of dollars. So there's other things that they are doing with their money to allocate it in a way that allows them to take advantage of the tax code that, again, might not be accessible to everyone else who is not doing some of those things from their business perspective because they're yet maybe too small or they're just in the growth stage and they're not able to take advantage of that. But, one day they might. So the goal is to get you to the point where you can start generating jobs and giving back to investing in the company's growth where you don't have to pay so much in taxes. And again, it's all about maximizing it, but it's not just getting away with it or trying to cheat the system, right? It's just doing the right thing in the right way where we can take full advantage of what the tax code allows us to do.
Well, I think that's fair. I mean, nobody wants to pay taxes, but everybody needs taxes to be paid.
Mm-hmm.
Right?
Exactly.
I mean, we do. And the larger corporation or the larger a corporation is, I think that the larger their corporate responsibility is. Right?
Absolutely.
So yes, they're doing things like, as you said, providing jobs and paying local taxes and things of that nature. But the larger the company is, the more the community actually needs them to be a part of the community.
Yeah, it's contributing to the local economy. It's generating, cash to go around and allow people to be able to afford things. So it's not a bad thing. Now, of course, there's, those stories where people feel like corporations are getting away with a lot of things. And there might be something going on there. I don't know. I'm not the IRS. I'm not the one auditing them, right? So we have bodies and regulators out there who are watching out for those things and look for red flags. The SEC, the IRS, they're going to be looking at those things to make sure that they're obeying by the rules. So yeah, it might feel like, oh, darn, I can take advantage of it, or it's not, good for me. But as a business owner, you have really great advantages from a tax code perspective. You're not paying taxes on every dollar you make. You're paying a net of expenses. And that's a huge advantage compared to just having a job where you're paying on every dollar that you make.
Right.
And so, as a business owner, you do get some benefit, not at that same magnitude or level. But again, the goal of being in business is to make profit, pay yourself, and generate a long-term sustainable business.
What?
So if you're paying taxes, that's a good thing.
Well, wait a second. You said something astonishing there. The goal of business is to make a profit?
Surprising and shocking, but I tell you, we get hired a lot because a lot of businesses are not doing just that. And the whole point of why we got into business is hopefully to make money and be able to even generate more wealth than you would otherwise from a day job. And if that's not happening, then we need to put a plan in place to make progress towards getting back to that, even if it takes us, a fraction of time to do it. 3 months, 6 months, a year, it doesn't matter as long as we're making progress towards that goal, because that is really why we got into business. I sure hope most people did.
Well, unless they started a nonprofit, right?
Yeah, but even nonprofits make money because they have to have impact. And how do they have impact? By having money and managing it the right way.
That's true.
So they also are aligned to that same goal. Now they have all their advantages, of course, for their status, but so do other entities, tax entities, for depending on how you register your business.
Yeah. All right. Well, I like that. Now let's talk about how you help a business, right? Your target market is high 6 and 7-figure businesses. First, how do you find them?
Well, through outreach, a lot of thought leadership and expertise that I get to share in this type of conversations and in any workshops that we teach, any conferences that we attend, to connect with our business owners. Because the biggest thing with the people that we work with is we are trying to build trust first. We're not trying to get someone to open up their QuickBooks for us and be like, I can help you. Nobody wants to do that. Nobody wants to talk about money, and nobody wants to bring in a financial expert to come look at their mess, right? So you can't just go in to find people and say, hey, here I am, ready to help. They're not going to want it. You need to first build trust, understanding what are the customer needs, where are their pain points, and how you might be able to help and why you might be the best fit for them. And if you're not, that's okay too. The goal is to make sure we're educating, empowering, and giving business owners a sense of control over their financial situation by educating them in what they don't know and how things should be managed in their business, some of the gaps that they are not aware that they're having, and bringing that to light gets clients to want to work with us. Clients are everywhere, right? There's plenty of business owners attending conferences and webinars and masterminds, and they're sometimes attending their local events with other business owners. Business owners know other business owners. So it's just getting the word of mouth. Referrals is a big source for us. Social media and the internet, putting content out there for people for free to, understand what could be some of the problems that they feel is happening in their business. They know there's something wrong, but they can't quite pinpoint it. And that's when they start to outreach for, okay, who can help me with this? And they start with, well, I have a bookkeeper, so I should ask the person that does my books. Or I have an accountant, I should go talk to my accountant more than once a year. And yes, some accountants do the work that we do and are well equipped to do that. But sometimes they have 300 other clients they have to attend to. So they might not be able to give you the level of support or hands-on that you need for the business to thrive financially. A bookkeeper, they might just want to close your books and that's it. They might not have experience doing financial forecasting or projections. And so that's when the role of the CFO really comes into play, is when you're asking questions and you're just not sure who to turn to. And you need more direction and be able to set goals and guidance for your business to change the course, because you're just not happy with what's happening right now. And it could be so much better.
I have heard that there are a plethora of business owners and accountants and bookkeepers who don't know the difference between a financial statement and a cash flow statement. Would that be true in your experience?
Very much so.
That's kind of scary though, isn't it?
It is.
Explain what the difference is between financial statements and a cash flow statement.
Yeah, so if you have your profit and loss statement and you're reviewing that every month, you're making a certain amount of sales, you're spending a certain amount of money, and then at the end, you might have some profit, hopefully not a loss, right? So you know what's happening in your business. How you collect and how you receive cash into your business, it's very different because the cycles might be off. Let's say you have net 30-day payment terms. You might have made $100,000 in sales that month. You might not see the money for another 30 days. So your bank does not have the money to cover, let's say, $60,000 of expenses that you had for the month to generate that $100,000 in sales. And that money is coming in 30 days. If you're lucky, they'll pay you on time. They might also be late. And in the meantime, you have to be able to cover those expenses for 30 days. So then people get surprised when they go into business and they're like, what's happening? Why? I just made $100,000 of sales. Why does my bank not have $100,000? Mm-hmm. Right? And it's a cycle of cash versus when you make sales that people don't understand behave differently and need to be managed differently to understand how the cash is behaving, how it's entering the business, how and when it's leaving the business as well, to make sure you have enough to cover before you get paid.
I think that what gets lost is in the financial statements, that's just a snapshot in time, right? Mm-hmm. It's like, exactly. Okay, well, on this date, this is what it looked like. Whereas the cash flow statement, we're really talking about the money. We're talking about the actual physical dollars that a business has. And that mm-hmm. top line revenue number has no basis in comparison to what the actual cash is.
There's so many factors. That's why we have receivables. And, if you're not looking at your balance sheet where your receivables are being booked, that's where your money is sitting. It's waiting for you to collect, have an invoicing process and system that reminds customers, hey, by the way, you still owe me money. Here's your due date, or here's a reminder that you're past due. Mm-hmm. What do we do if we never collect that money? There's all these processes that normally are lacking in a business that need to be set up from a financial perspective to ensure that those things are not problems. Also, you can change your payment terms. You could say, hey, I'm going to pay upfront and in full. If the industry allows it and clients are agreeing to that, no collections process on the back end, right? But depending on the industry, there will be some expectation on payment terms that you might have to obey by. So just being mindful and aware of that as you go into that industry and having enough cash up front to fund your operations so that this doesn't become a problem later is going to be a key aspect of managing cash in your business.
Yeah, that whole days outstanding on receivables, it's a huge thing, right? I worked yes. for a company once, and I was setting up their actual collections department. Right, we're talking a major, company, And their days outstanding when I was brought on was approaching 89 days. And I'm like, how are you even in business? 89 days outstanding.
Mm-hmm.
He says, well, that's why we need you, right?
Yes.
In 13 months, we got that number down to 44 days. And then they were unhappy because we were being too aggressive with their best customers. It's like, whoa.
And that's a balance. Right?
Yeah.
It's a balance on like pushing to collect, making the customer unhappy because maybe you pulled in their date or you're pushing too hard, versus losing the business completely going forward and not having that revenue stream. So it's always a careful balance, but it's a conversation with the customer account manager and the collections, department to decide what is the best approach. How often do we want to touch base? Do we want the customer person managing the account to bring it up in their conversation casually? There's so many ways you can follow up on that. It doesn't have to always be a nasty email saying you're past due. But after 90 days you have a really less likelihood of collecting on those. So you definitely don't want your receivables to keep growing and getting longer days outstanding. So it's a metric that we do look in business.
I was going to say, as a CFO, isn't that going to be one of your red flags? It's like, okay, how long is it actually taking? Are you actually financing your operation in order to finance your customer's operation? When you look at it like that, I'm paying interest to get money to cover the expenses that I have to cover because you're not paying me. So in essence, I'm financing your operation as well.
Yeah. And sometimes business owners get lines of credits to be able to do that and wait for them to collect. Sometimes they are able to stop the work and just stop supporting the customer and say, hey, until you get current, we're not going to be able to work with you anymore. You do have some ability if you have that type of business. If it's a business where you're just selling goods, if you're already delivered, you might never see the money, you might see it late. There's no leverage there. So understanding what that is and making sure that you have an appropriate process for collecting on the cash side of your business is going to be just as important as reviewing your profit and loss statement and managing the profitability of the business.
And these are the types of conversations that you have with your prospects and your clients, and having them understand, well, yeah, this doesn't reflect on your books as a loan to that customer, but because you're not collecting, you are indeed giving them a loan. That's why you don't have any profit.
Yeah, that definitely solves a lot of the questions that business owners have around why is my business, so behind, or feeling like it's always having to be funded by something else or personal funds sometimes even. Then we create a strategy. We try to brainstorm problem solving, right? Like I said, maybe we stop services. Maybe we have a more robust process of collections. Maybe we ask for a deposit up front to avoid having to collect so much on the back end. So we know that most of our costs are covered with the initial deposit, and then the rest is just a profit, and we can go after it, but knowing that we can cover our operational costs.
Yeah.
But until you start, diving into it and dissecting it and thinking through the overall strategy on like decisions you made and how it impacts your cash, it's really hard to move out of that cycle, because once it starts, it's just like a snowball. It gets worse and worse every month you go through it.
And none of your clients want to hear the COD.
No, we want them to scale profitably. And this is part of it. We evaluate all the aspects of financial health to help them adjust where needed with, those changes that are going to make a difference in the sustainability of the business. We don't want them to go out of business because they don't have cash.
Right. And you don't want their clients to go out of business either. Right. So that's where you talk about that balance. Now, as a CFO, why do I not just hire a CFO as opposed to a fractional CFO?
Yeah, because it's expensive. If you think about total compensation package for a CFO, it's anywhere starting from like $200,000 to $400,000 a year, plus equity, plus bonuses as a percentage of company performance. And so most business owners at that level are not able to afford that type of compensation. It's an executive level position. So what you do is you hire the expertise and the executive level experience for a fraction of the cost. So then we build capacity to support you at a different level. It's not full time, obviously. And we decide what that support model looks like for you. And obviously we have some predetermined ways to support you as well, but there could be some customization in that. And we say, hey, we're going to just give you a fraction of our total cost. And we're going to work with 10 to 20 clients at a time only, so that you actually have access to us and support. And we're there when you need us to make those decisions. And we're doing the data analytics, the comparisons, all the reviews that need to happen around the finances to hold you accountable, keep you on track, and make sure we make adjustments as things continue to come up that are issues in the business.
So you're creating a real partnership with those clients, because they cannot have those kind of conversations with somebody who's just a technician.
Yeah, I mean, they try to have it with their spouse or significant other. They try to, they definitely don't want to have it with their employees. They can't be like, I can't make payroll in 2 weeks. That would be a really, unnecessary conversation with their staff to, panic everyone. But those are the kind of conversations we have with our business owners is what is happening, what is going well, what is not going well. Can we do more of what's going well? Do we need to double the investment in this area? Do we need to pull back expenses in this other area to increase the gap? It's all about creating that bigger gap to profit, having healthy margins, understanding what is their growth scale and pattern of hiring, and making sure that they're able to afford all of this. And again, flagging problems before they come up. Right? Our job is to prevent and de-risk the company from financial trouble. So by projecting and having a plan ahead of time with a goal set, we can start looking and seeing, hey, are we on track? Are we off track? Do we need to change anything? Do we need to double down on sales? What is it that we have to do to make sure this plan becomes a reality? So it's not just about making the plan, which is the first part of what we do, but it's also holding you accountable and helping you adjust or pivot as needed along the way to ensure that that plan becomes a reality.
Now, I'm a marketer.
Yes.
I have the heart of a marketer. And when things get tough and cash gets tight, I hear frequently, well, we're going to stop funding marketing.
Yep.
What's your opinion?
That tends to be the case. Honestly, when I'm working with clients, we look at all expense line items and we talk about the tie or relationship it has to impacting revenue. And so the last thing I want to cut is sales and marketing, because if I need more money, I need to be able to generate it. Therefore, I need other people selling and bringing in the leads and bringing us cash in the door, right? And that's done through long-term marketing activities, but there's also short-term sales that can be increased or done more of so that we can make sure that cash is coming in the door, especially during tough times. And there might be a need to double that budget, right? There might be a need to maybe for the long-term marketing strategy takes a back seat, but we can't afford to not do the short-term marketing strategy. So thinking about any expense line item and its relationship to revenue, because maybe you want to lay off the admin support instead. You might not want to need an assistant anymore or an operations person. Instead, you want to keep your marketing team. Those are trade-offs and opportunities that the business owner has to assess and decide where do they want to cut back. Obviously, we have recommendations and we have, perspective on what we think is best for the company. But ultimately, the decision lies with the CEO and the owner on where they want to take action. And sometimes business owners don't want to hear it. Sometimes they want to do what they think is best for the company. And it is their company to make decisions on. So we're just here as an advisor to provide, data and perspective to help them hopefully, come out of this situation. But we're not really tied to having them decide a certain way or make a decision that we want them to make. We're just here as advisors, and then they can take it from there.
All right. So I have two things to say about that. One, those business owners who do make the decision to cut out sales and marketing, I think are hastening their demise. Almost always. Second, I think you and I can be friends.
Great. I mean, at least they're going to pick it up themselves and start doing the work of the sales and marketing team that they fired. There's really it's probably a lot more work than one person, obviously, if they had a department. So
I just say
it's something for them to consider.
Companies at that level, though, yeah, you're going to be hard pressed to do all that yourself.
Correct.
Right.
And your time is probably better spent elsewhere. even on doing more business development yourself and adding to the sales and marketing team initiatives, but also making decisions that only you as the CEO can make that no one else can, and using your time, the highest benefit you can get for your time, ROI, and setting the direction, reviewing high level what are the key decisions that the business needs to make to move forward that no one else can do in the company.
Yeah. And I'm assuming that they have efficient marketing in place, but if they don't have efficient marketing in place, well, it's appropriate to examine that and see, can we be doing that better? Right?
Yeah.
Can we be spending our budget in a more efficient manner?
Always. Yeah. And that is always a question we'll ask, right? Can we reduce the scope and still get the same results? Can we have the marketing team and do a different type of outreach that still gets us the results and the ROI for it? So we're going to ask the questions at the end. The owner's going to make that decision. But of course, it's not off the table. And it's definitely the type of questions that we want to be answering and evaluating, because we want to be diligent in our approach. And it's not that we don't touch sales and marketing, it's that we have to ask the right questions to get to the right answer.
Yeah. There's a lot of people that don't know how to ask questions though, right? It's like that is both a skill and an art. Because if I'm asking a question, and I find this a lot, that people aren't listening to the question. They're already figuring out how they're going to respond. Well, you didn't hear the end of the whole question.
Yeah, and that is an aspect of a lot of what we do. We do more listening than talking. We do a lot of thinking on behalf of the business owner, all from a financial perspective, of course, and also making sure that it's aligned with the goals of the business owner. At the end of the day, whatever the business owners think is important, it's what we want to work towards. And we are in that partnership, in alignment. And if we disagree, it's okay to disagree. But at the end of the day, like I said, the company is theirs. So we work for them to support them in achieving the goals that they have set for themselves personally and for the business.
Well, to that remark, well, at the end of the day, they do make the decisions. That doesn't mean that they make the appropriate decision, because I see that a lot, right? Well, yeah, we're going to continue doing it this way. Hey, great.
Yeah, until they can no longer, and they realize that maybe that wasn't the right direction, and then we deal with the consequences of that. But by then, I would hope that their CFO has advised them and said, by the way, these are the risks, and this is what you might face as consequences if you decide to go down this road. And the business owner decided to take on the risk and be okay with it. But they're going in with eyes wide open on what could possibly go wrong, or what is the cost, or the time commitment, whatever it is, the decision they're making. And they have accepted that it's okay for them to take that risk. And sometimes they'll pay off and sometimes it won't. And it's okay, because we can build back from there and try to make the next decision, the next pivot, or the next direction we need to set based on the outcome of those decisions that were originally made.
Yeah. If they have somebody on board, or somebody like you that's part of their, advisory team helping them with strategy, yes. But before they meet you, now what?
Yeah, they're flying solo, and if they're not looking at their numbers, they're really flying blind, right? We talk about numbers being the dashboard in your car and the GPS on your phone that tells you where your destination is. Yeah. Don't you want to get there the most efficient way, avoid the traffic and avoid the wrong turns and avoid running out of gas? Well, that's what your finances are, right? It's your dashboard. It tells you where to go, how to go there, and how to best get there with the least amount of effort and pain. The CFO job is to help you navigate to avoid the risk. Oh, hey, there's a bump on the road. Let's change lanes. Hey, let's take the right turn because actually traffic just started to pile up ahead of us. We want to go take the right turn to avoid all of this. And it's about that partnership and flagging things out if we see it coming before they become an issue that you just hit another car and you're like, oh, well, that wasn't fun. And now we have to deal with that consequence of not having had, our eyes on the road or looked at our dashboard and run out of gas and be stranded on the side of the road. It's a really good analogy for how we do the work that we do and how we help business owners.
So brings to mind, right? Talking about bad decisions. Have you ever run into an Enron? Right? They're getting advice from like an accounting firm. They're getting advice from the CFO, but it was not the right advice. Mm-hmm. Right?
Yeah.
and ultimately in that case it included criminal charges. But I mean, in a change in the entire accounting and auditing world.
Mm-hmm. Yeah,
But they had that advice. They had somebody giving them the risk assessment, but it wasn't the right. They weren't even using the right numbers. They weren't using the right risk management tools. They were given the auditing team the old wink, wink, nudge, nudge.
That was the problem right there. We started this conversation by saying we operate in the highest integrity and honesty with our clients, and we expect the same from our clients. And if we find out that at some point in time they have not been honest about their numbers or are doing things that they shouldn't be, we will be the first to call them out, and we might even decide not to work with them going forward. Yeah. Because unless they correct it and they said, oh, that was an oversight, we didn't realize we were doing something wrong. Great, let's fix it. Let's make sure we restate things and, come clean and make sure that, if we need to refile, our taxes, we do so as well to make sure it's all clean and clear. If they take a different approach and say, oh, no, just wink, wink, we're going to move forward, they probably won't be my client the next day, because we just are not willing to support that type of attitude or, trying to cheat the system. That's not what we're here for. And like someone else can sign off on that, and that's fine. But that is not the core values of what we do. And it is something that, as far as my finance career goes, it's been very ingrained in us that we are that body that gets to call people out if they're not doing things correctly and gets to work with them to help them adjust it if they're willing. But if they're not willing, they just won't work with us.
Yeah. They not everybody can be saved, right?
Mm-hmm, exactly. If they don't want to be saved, I can't help them.
Yeah. So how do you have a relationship with accountants out in the world to, either get new prospects or to help and assist your current clients?
Yeah, there's a lot of accounting firms out there that have, like I mentioned, 300-400 clients at a time, and they're just not equipped, and they also don't have the desire to provide CFO services. So we do work with a lot of accounting firms in partnership to come in and take care of their clients. One, they trust us. They know the type of support we do and how we treat their clients. We're very respectful of the relationship that already exists there. And we actually work in partnership, which is really great because I know the accounting firm owner and can work with their team to say, hey, we're seeing this. We want this adjusted. We want to see this different view. How do we best do that together? And we at times get tasked to manage that accounting relationship as well as any bookkeeper support they might have, because we are ensuring that the financials for the company are accurate and that we're building on a solid foundation. So that's an important aspect of the partnership I have with accounting firms when they bring me their clients or when we bring them clients as well, because my clients sometimes are looking for a new accountant. Right. And we also have partnerships with law firms and other service providers like HR consultants that are working with our business owners already in a plan to maybe hire, the next 10 people. And they're like, I'm not sure, can we afford this? And they're coming to us with that question. And we're like, yeah, let's do an analysis and make sure that you're in good shape to be able to afford that next. So there's a lot of service providers we work with directly to mutually take care of clients that are in different industries that need the access to expertise from the financial side.
I am seeing a big push out there in the marketplace, especially post-COVID, of this idea that people can become bookkeepers as a side hustle, right? Yeah. They weren't necessarily bookkeepers before. They weren't necessarily accountants before who were becoming bookkeepers. Do you foresee this being an issue? Because, if you have people that aren't very experienced doing books, how much can you trust the books?
Well, and that's the first thing we'll do is assess the health of the books that you have. And we've seen it all, right, at this point. We also have bookkeeping in-house for this very reason. And I'm not saying every bookkeeper out there is bad. I think some bookkeepers have decided to make a career change and they've trained themselves and they're doing great work. It's very transactional and compliance based. So it's very easy for people to get into the industry and do a good job with it. Where I think sometimes they lack the knowledge is around the accounting foundation, and not a lot of bookkeepers have studied or done any work around accounting foundations. And that is where we notice some of the gap exists. But what I say from this perspective is that when I work with clients that have existing bookkeepers, a lot of their bookkeepers are really eager to learn, understand, and adjust and adapt. So they just need a little direction. When we come in, we friend them and start working with them as colleagues and say, hey, here's how we would like the P&L categorized. Here's some things that we're seeing that are a little off. Let's change them. And they're like excited and happy to learn and get some direction. They actually be longing for that direction because, like you mentioned, maybe they just got into this and not really sure. Am I doing it right? Am I doing it wrong? And, everybody wants an accessible and affordable bookkeeper to start. And then as they grow, they might need more professional bookkeeping done. So having an accountant oversee or a CFO oversee some of the work is an important aspect of ensuring your financials are healthy and well done. Also, an experienced bookkeeper who's been doing this for 20 plus years, 5 years, they have some experience they can pull from and have learned some of this accounting concepts can be a great addition to the team. And again, over time, you'll notice because you will be unhappy with the support or you'll see your numbers don't really make sense. You as the business owner have this gut feeling and an intuition around your business. Where things you spend money on and such. And you can see if, the expenses double what you expected. You're like, that's interesting. I don't think that's right. Let's look a little farther. Let's ask the question. Let's look at the transactions and make sure things are being bucketed correctly. So it's your responsibility, if you're not going to hire the professional bookkeeper, to do that work. We take that on for our clients to make sure that they don't longer have to worry about that.
I think that's an awesome answer. I really do, Carla.
Thank you.
I think that's awesome. The higher up you go revenue wise, the more at risk you are for things happening without your knowledge.
Absolutely. And
so
you're busy.
Yeah, you're busy. You're running your business. You're working on your business. You're working in your business. And, without having that backstop, somebody to look over your shoulder financially, you could run a risk.
Yeah, I mean, at the end of the day, once a year, your accountant is going to sign on the dotted line for you if they're filing your taxes for you. So they need to ensure that your financials are accurately stated. So they should be asking questions. They should be reviewing it. And because that could come back, right? But that's why you hire an accountant, is to ensure the accuracy of what you're filing. At least once a year, it'll be looked at. Ideally, we're looking more often at it monthly, to see what's happening with the business and use that information to make decisions. But worst case, if you have nothing else and you're doing your own bookkeeping and you just have a CPA that's filing your taxes, at least you have that one checkpoint to look forward to.
Yeah, that seems like a risky proposition.
Well, for smaller business, the risk is less, right? But still a risk nonetheless. And anyone can get audited at any point in time. So this is something that, business owners need to keep in mind. And it is compliance work, so nobody wants to spend the money on it. But then when they get in trouble, they're like, I wish I would have had. It's like insurance, essentially. Right? You wish you had it when you needed it, but when you don't need it, you're like, oh, why am I paying this? It's so painful. And again, having someone on your team that's, keeping an eye on what's happening and reviewing and ensuring accuracy is going to be a huge deal. I have clients that are preparing for sale at this point, and we're looking at financial statements 12 different ways, right? We need to break out the data. We have to do accrual-based, cash-based, managerial. We have to do so many different projections and actuals and making sure that we're always reconciling to what has happened in the business. And this is one thing that I see often miss is people are categorizing their transactions, but they're never reconciling. And then that is essentially the checking to make sure that you didn't get charged double for a subscription, that you didn't get charged, more than you thought you were paying for something. Maybe that a charge is missing altogether. And then later you'll get a bill for 10 times as much because you didn't pay it for 10 months and you didn't realize.
Right.
These are the kind of things that reconciling does to check on the cash piece of it and make sure that nothing is missing, both from your bank, credit cards, savings account, in all areas to ensure accuracy.
Well, on that point, I have read that a good bookkeeper can save a business as on average 16%.
Yeah. I mean, it's true because financial statements need to be accurate to file taxes. So if you wait and you don't have your books done, Cleanup costs are expensive, to catch up 12 months of bookkeeping that you haven't done, and painful because you will have to answer a lot of questions and know exactly what happened 12 months ago with a one charge that you really do not have time to talk about and really can care less, but it's a requirement to be compliant with filing your taxes. So why wait? Just keep doing it. Make sure you outsource it as soon as you possibly can afford to. And yeah, the bigger you are, the more of this financial accounting support you should have on your team.
Yeah. All right. So you mentioned something in an earlier conversation about a training session that you do that's 3 hours. What do you cover in that training session?
Yes, the 3-hour training is through a nonprofit organization that I've been part of for over 4 years now. We teach everything to get started on your business, make sure that you understand why bookkeeping is important, when do you do it, why do we do it, when to hire an accountant. We go over financial statements, what they are, how do we use them. We talk about pricing. We talk about projections. We talk about cash flow management. We cover a whole spectrum of the things that you should be aware are things you should consider in your business from a financial perspective that a lot of business owners don't get education on, but they're expected to be able to manage without any of the knowledge. And so I cover that broad spectrum because that is the reason a lot of businesses go out of business, because they never manage their money or their numbers. And a lot of businesses that are scaling or growing fast think they don't have problems until they do. And then it's a little bit too late because they've grown so far beyond. Without the foundation, it's much harder. The fall is much longer and hard hitting than if you would have started with a solid foundation at first. So if you're not experiencing cash problems, but that, you just keep growing and growing and growing, and you're not sure when your biggest client is going to all of a sudden cut their budget in half and leave you stranded, you should be thinking about those things and preparing and planning with a cash runway and having things in place that help you feel good about your business. And, I get it. Like, not everybody's turning a profit. Sometimes you have good years, sometimes you have bad years, but managing that proactively is really what's going to make the difference for your success long term.
And so you cover all of that in 3 hours.
I do, yes.
Do you just do that locally, or do you do that online?
It's online through a program locally, but we do the classes online. And actually, funny enough, I just did a 3-piece workshop series that we are going to be releasing by the end of the year around this 3 aspects of managing your numbers in your business. One around cash flow management, because we talked about the criticality of it, and I want more business owners to understand how and why. There's even like a worksheet that is included in that. And then just some basics around business finances, and then the more advanced forecasting, forward planning that we do for clients. And obviously, if you take any of these workshops and you're like, oh my God, I am overwhelmed, I'm not sure where I would start. That's why, we help a lot of business owners with these aspects of the business, because it's not that simple. It gets more complex the bigger you get. And like I said, the fall can be hard hitting if you don't know where to start or how to go about it. Don't wait until your business is so successful that one thing that makes it go south, all of a sudden you're back to where you were 5 years ago. That's just like crushing, right? You put all this time and effort. We never want the finances to be the reason why, but it will be the reason why if you don't pay attention, because it is a critical aspect of business success.
Awesome. I like that you're doing it online. I like that you're breaking it up. I like that you are part of a nonprofit to help educate. And it's also marketing for your business.
Absolutely. We love leading with education and empowering business owners to understand the type of questions they should be asking about their finances. And then if at that point they're like, I can't do this and I can't handle it, that's why we're here. They can hire us and outsource a lot of this to us, and also get some, support and advice and consulting for their business that is much needed.
Yeah, that's a really good program. Now, do you aim it at certain size businesses, or is it just open to anybody?
Yeah, it's mostly for either starting businesses or, kind of middle of the road of $500,000 size business that, never really took the time to set that foundation, but they're obviously successful. So they want to start building that infrastructure now before they get to 7 figures. Because again, not impossible. It's just a little bit more effort to put it in place. And, if you're going to try to do it yourself, it might feel very daunting. So to avoid that, having some of this foundation set up ahead of time is really going to be helpful. Even if you don't do it right, or even if you don't have all of it, just starting to get familiar and start to get comfortable with reviewing numbers, managing numbers, it's going to give you a different perspective on your business altogether. Funny that I met with some clients the other day, and a lot of the work we did is just look at, compared to last year, where have they been? Have they grown their business? And they were shocked to learn that their sales had gone up by 10% year to date, and another business 32% year to date, because they were telling me how horrible their business felt. And I said, well, let's celebrate the things that are good about your business. And yes, scaling is hard and managing expenses is hard. Sometimes we don't feel like we're as profitable as we should be. But just being able to reflect on that and celebrate the wins is a really important aspect of what we do and why we want you to be looking at your numbers.
Yeah, I like that. All right. So you ready for the special questions?
I am all ears.
What's something you didn't pay enough attention to or you ignored early on, then you had to learn the hard way?
Ooh, I'll say accounting. So funny story, my mother's an accountant, and I said, I will never be one. So I went to school for finance, which is like the closest thing that you can to accounting. And of course, having an accounting foundation is such a critical component of what we do. So once I was forced to learn it, I really started to fall in love with like how it allows me to do my job better because I have that, accounting knowledge behind me.
That's interesting because, back if we go back in the way back machine, I took some classes in accounting and I took some classes in finance, and I loved the finance classes. I thought this is so cool how you can, really dissect what a business is and what they're doing and figure out, the health of the company, all from an investing standpoint, right? And then you get into accounting and like, I don't, no, journal entries, no, I don't want anything to do with that.
I love my accounting friends, but it takes a special kind of person. And it's very much that, and they enjoy it, which is great because someone at least does. And, I just know enough to be dangerous and ask the right questions. But then other than that, I'm like, bring in the CPA. I would love to talk to them and have a conversation around more in depth around the accounting needs.
Yeah. That's funny. All right. So what is something you did radically different than your peers 5 years ago that might have led to pushback from them, but served you well in the long run?
I started a business.
You started a business.
Yeah. 5 years ago, we started this consulting firm just with the goal to help business owners, have a profit, be able to pay themselves something and not run out of cash, because we felt that was an important aspect of being a successful entrepreneur and business owner. And I thought, hey, why not do it myself to first understand how this works, what it entails, and better help and service my clients. But also had this deep expertise and thought leadership around finances that I knew could be a great asset and value add to the clients that we work with. And so, just started, crafting offers, making sales happen, had to learn how to sell, had to learn how to market, how to work with clients, how to do the deliverables that we wanted to commit to, how to charge them price, how to create packages, all these learnings that go into being a business owner that just allow me to better connect with my clients now and understand how hard it is to achieve a certain level of success in your business and also maintain it for the long term, right? Because business owners are going out of business the first year because it's so hard and they just cannot have the perseverance to continue. And these people that are making it and are hiring me to be their CFO, they're just doing amazing things. So I'm just always in awe of other business owners, but also know how hard it is to create something from nothing, but it's also super rewarding. So I say that was the best thing I did that some of my peers don't understand yet. They still don't see the benefit, but they always are asking questions because they're curious.
Yes, the life of an entrepreneur.
Exactly.
All right, last question. What's something important to your daily routine that you wish you had started sooner?
Wow, I've been experimenting with a lot of different things because I feel like we get so bombarded with information so early on the day, especially having our phones so readily available. So I've been trying to stop looking at my phone in the morning and just had coffee and my breakfast at a slow pace. If everything else goes wrong, it doesn't matter because I at least had my coffee and my breakfast leisurely, sitting down, maybe even reading the news, but that is intentional, what I'm absorbing and when. And then just taking a moment to breathe, because honestly, we're just so busy and we're in such a, chaos mode all day, talking to clients, servicing clients, doing things, recordings and marketing and stuff, that sometimes just having like those 10 minutes to like eat slowly and just relax before you kick it into high gear is just a good way to start the day.
I like that. I've been doing that myself. Just
easier said than done.
Yeah, it is. It's like, you're anxious to get into it and figure out, well, what happened overnight, right? I know something happened. What happened? And invariably, there are no emergencies. It's like, okay.
We're not doctors. We're not saving lives or babies here. So, everything can wait 10 minutes. Nobody's going to, you have an emergency because of it. So, yeah.
My old boss at GE Capital, you would go to him, you say, oh, we got a problem. And he'd say, well, you know what? Let's just wait 24 hours and see how big of a problem it really is. And invariably, 9 times out of 10, it would resolve itself. It wasn't an emergency. Nothing needed to be done about it. And on that 10th time, it's like, okay, yeah, let's take a look at that.
I mean, corporate life, we can talk all day about it, right? But yeah, sometimes you sit to let people figure it out on their own and really come back if they really need us.
Yeah.
But yeah, you're right. Sometimes that's all it takes. Time helps resolve some things, and sometimes it doesn't. So then we have to jump in.
Yeah. And I find this even today is like sometimes people want to make their emergencies your emergency. Like, no, it's not my emergency. I don't have a problem.
Mm-hmm. Yep. I always say their lack of planning is not my emergency.
Right.
So, and there are some real emergencies, so we'll handle that. But for the most part.
All right, Carla, this has been great. Tell us where we can find you and who you can serve.
Yes, thanks for having me. We can be found on our website, wealthworthwithin.com. We're also all over social media at wealthworthwithin. We put a lot of free content and advice on our channels on Facebook, Instagram, TikTok, YouTube now, LinkedIn as well. So make sure to follow us. We post blog articles as well as video content. So if you enjoy that, make sure to check it out and leave us your comments. Let us know what you think, and maybe even give us some ideas for what content you want to see next. They can work with us if they're a high 6-figure and 7-figure business owner that is just struggling with their financial situation, not sure where to go next. They're asking a lot of questions that both their accountant and bookkeeper are not able to answer, and they just want a little bit more hands-on support and also access to expertise in their business to get them to the next level. Our goal is always to make sure that clients are seeing the results in the numbers. The numbers don't lie. And if we're not doing our job, it will show. So making sure that we're partnering with the right people. We work with service-based businesses, online-based businesses, e-commerce, retailers, a broader spectrum. And it's what allows us to bring some industry comparisons across different industries to our clients and give them the best that we can find out there that's working.
Yeah, very good. This has been a pleasure.
Thank you for having me.
Oh, it's like I said, my pleasure. I appreciate you bringing your expertise and insight to this and, participating.